In today's economy, more people than ever are looking to buy and sell businesses. But how do you do it? Welcome to the Deal Board, presented by Transworld Business Advisors. Straight talk about real deals and real people. Listen to stories, interviews, and expert advice to help your business sale, merger, or acquisition process. Now, here are your business exit experts, Andy and Jessica.
Hi, welcome back, everybody. And we've got an exciting episode of the Deal Board podcast. We've been inviting people from our network to come on and share their expertise. And today we have two people from our network, both Transworld and Exit Factor owners, Jonathan and Calvin. And they're experts in a topic we get a lot of questions about, right?
We do, IP valuation. And we've had some experts on in the past, but we are hearing right from people that are experienced in it. And I think it'll be very interesting because it is a world that is growing.
Yes.
I mean, you think about all the AI out there and people are scrambling to say, well, who owns the IP in these things? And when we're selling businesses, we've sold some businesses that had some major IP. And it's not just the IP, say that you have a patent. Mm-hmm. It's the IP that goes beyond that as well.
Yeah, I think traditionally when we look at IP valuation, it was patents mainly, right? Trademarks, but they didn't have as much value as patents. But even with patents, it's so hard to judge that IP, and you really need to work with a specialist on that. But moving forward with this technology and AI, and I really think this is going to become a bigger topic for valuation and for business sales.
Yeah, I think name, image, likeness, all that kind of stuff kind of flows in there.
Right?
Yeah, it's definitely creepy. So
yeah,
I think this is a great subject. Of course, we have our listing of the week and deal of the week as well. So
we hope this brings value to you. Let's jump right in.
Transworld Business Advisors is the world's largest business brokerage and mergers and acquisitions firm with over 1,000 brokers and nearly 250 offices worldwide. Transworld's team handles thousands of business sales every year. To be connected with a qualified business broker or learn more about the buying and selling process, visit tworld.com/thedealboard or call 888-719-9098.
Welcome to today's episode. Today, we're diving into the fascinating world of intellectual property, or IP in short, valuation, and its role in mergers and acquisitions. This is an essential topic for entrepreneurs, investors, and anyone interested in maximizing the value of their intangible assets. My name is Tampubolon. I'm the partner at Transworld Business Advisors and Exit Factor of North San Gabriel Valley, Beach Cities, and Torrance in Los Angeles County. We offer business brokerage and exit consulting services. I'm happy to have Jonathan Cheung, my business partner, here today as well. John is a graduate from UC Berkeley Haas School of Business, and he is a chartered financial analyst CFA charter holder. Jonathan, I'll turn it over for you for a brief intro.
Awesome. Thanks, Calvin. I'm excited to chat today about IP valuation, as this is the field I started my career in before I joined Transworld and Exit Factor. Mm-hmm. I was with KPMG's Economic and Valuation Services Group, where we valued businesses and intangible assets, focusing on Fortune 500 clients. I co-founded a couple of tech startups with IP, and I'm also active in the venture capital space today as a venture partner, investing in startups with strong IP. But I'm even more excited today to have Oommen Thomas, my mentor and former boss at KPMG, who actually hired me out of college. Oommen is an industry expert in business and IP valuation. He was a national practice leader with KPMG's IP consulting practice and managing director with KPMG's economic and valuation service practice. He is now the co-founder and partner at Venndigm, which provides financial, strategic, and technical perspectives on all forms of IP throughout the business and transaction lifecycle. Oommen has a PhD in finance, an undergraduate degree in engineering, and teaches finance and statistics at Northeastern University. Oommen, thank you for joining us today. Before we discuss general IP valuation, I'll turn it to you for an intro on Venndigm and what you do.
Thanks, John, and thanks, Calvin. Great to be on the podcast with both of you. So what we do at Venndigm is help companies unlock the value of their intellectual property assets. companies generate IP over time and they have IP assets. And our goal is to help realize the value and generate a return on investment on those assets. So this can take many forms. So if you are a company wanting to sell the enterprise, we help the company build a narrative around the IP, how IP creates value, why it creates value, how much value it creates. And or if you are an investor, we help the investor perform due diligence on the assets. Are the assets of high quality? How many assets exist? How do they exactly help the acquirer, both in the acquired business, but also in the acquirer's existing business, right? Questions of that nature. Then another thing and an important piece of what we do is to help companies use IP as collateral to raise capital, because companies have IP, and especially in the knowledge economy, IP is the company's primary asset. How do you use those assets and how do you leverage those assets to raise capital? And then finally, we also help companies generate cash flow from IP. So for instance, if you have IP that you can license, and even as you use your IP for your own business, perhaps you can license that IP for an application in a different industry, and that helps you generate cash flow in addition to the cash flow you generate from the business, your own business. Or you might want to sell those assets. You have excess assets, your business has taken a different direction, you have excess assets sitting on your books, you might want to sell those assets to generate cash flow. So those are the kinds of ways in which we help companies unlock the value of their IP assets.
Well, that's awesome. Well, thank you, Oommen, for that introduction and for what you do at Venndigm. We're glad to have you. And we're going to jump into Q&A right now. So just to set the basic, what is intellectual property valuation, and why is it important?
So at its core, what intellectual property valuation is trying to do is place a monetary value on the IP, right? So because when you think about IP, somebody might say it's worth $5 million. Somebody else says it's 7. Somebody else says it's 1. How do you know what it's truly worth, right? So it's placing a value. It's almost the easy part. The difficult part is thinking through how and why value exists because of the IP. So the valuation opinion or the conclusion, the number that you place on it is the end result of a lot of thought, right? And that thought process is very, very helpful in many settings. So think again of the M&A setting. If you're an acquirer, you want to know why that IP has value, and then start to then pull the thread and then figure out in what ways it creates value for you. And if you're able to pay a little less than what the value it creates for you, then you are in a good position to acquire those assets, right? Yeah. If you are, for instance, you have developed a new IP and you want to put it in the market, you are looking at it from the perspective of, hey, this is the value I see. Now I want to temper that with something which I can convince somebody else that it's worth something. I might believe it's worth $1 trillion, but I have to convince somebody else that that IP is valuable because of X, Y, and Z reasons. That's what a valuation does. Most people are focused on the number in the valuation, but perhaps more important is the story behind the valuation. Right? Again, think of, and if a to lend against your IP, they want to be confident that the IP, which is going to serve as collateral, has value. And how much value is it? And how sensitive is it to slight changes in economic circumstances, right? Licensing agreements, and again, how do you determine what royalty rates to pay? And that is, again, dependent on how and why the IP creates value. And then especially for larger companies or for companies where the financial statement numbers start to become very important, the being able to value the IP for reporting purposes is a fundamental need that many companies have, especially companies for whom IP is a critical component of value. Hope that gives you a better sense of how to think about valuation and why it's important.
Yeah, no, I mean, in essence, IP valuation definitely aids in strategic decision making and enhances overall business value. We can see that. Well, today we will focus on the context of mergers and acquisitions. Understanding how to value IP in M&A is vital for making informed decisions and maximizing business potential. So, hey John, what role does intellectual property play in the merger and acquisition?
Yeah, absolutely. So IP is often actually one of the most valuable assets in a company, especially in technology, pharmaceutical, and creative industries. And taking a step back, IP could be patents, trademarks, copyrights, and trade secrets, right? So especially in technology clients, right, it's the patents are really drive the most value. And so in general, in M&A, IP can influence the overall valuation and deal structure in three ways. The first is really what the value driver is, right? So strong IP portfolios can significantly increase a company's valuation. Buyers often look for proprietary technologies or brand recognition that can provide a competitive advantage. The more predictable cash flow can be, obviously, the higher the valuation of a business is. So having that protection is key, or that brand recognition. Second, negotiation leverage. A robust IP portfolio can be a bargaining chip in negotiations, impacting not just the price, but also the terms. Right. And lastly, from a risk assessment standpoint, right, when you're acquiring a company with questionable IP, that can pose not just financial risk, but also legal risk. So buyers really must assess potential infringements, right, making sure the IP rights are valid and enforceable.
Yeah, so I mean, that's very helpful. So definitely a strategic role. Understanding the value of IP is definitely crucial for both buyers and sellers during M&A. Oommen, turning to you, walk me through how you would approach an IP valuation during M&A transaction.
Very good. So I think I would keep two two concepts in the background before you start getting into the weeds of evaluation, right? One, like I said earlier, there are two aspects to the valuation itself. One is the valuation number, and the second aspect, as I noted earlier, which is why it has value, right? And also, it's important to think about the definition of M&A in this context. So there is M&A of a business, right? If you're buying and selling a business, the IP value embedded in that business is very different than when you sell IP as a standalone asset. So you can have M&A in IP assets versus M&A in a business of which IP is a part. And the reason for that distinction is that IP tends to be valued much, much more when it is embedded in a business where there is a line of sight into how the IP creates value. It's like an idea, right? If you have a great idea, people value the idea, but you value it more if you can show them how it can be executed and how it can create value through a business model and how some evidence of traction that the market wants it, right? So that's the distinction. That's important to keep in mind because people assume sometimes that the value of IP in a business setting is the same as the value of IP in a standalone setting. That's not true. Right.
That makes sense.
So, right. And so So one piece of the starting point of many of the valuations you do is to do a due diligence on the assets, truly understanding what are these assets, how many do you have, and so on, right? Are they legally protected, right? Think of it as like when you're buying a house, what the title company does for you, making sure that the title is in order, all the legal aspects are all taken care of. That is not the basis of why you would buy the asset, but if you don't have it, the rest of it is moot, right?
Right.
So, but also think about it like you're buying a multifamily rental income, right? You look at both the title aspect, but also the business aspect. So the second aspect of due diligence is realizing, hey, is this IP really utilized in the products that the company has, right? Or is it IP related to something else? They may have IP, but not really relevant to the business. Or they have a great product, but they don't have the right IP to protect the product. So that's the kind of things that you due diligence, because if the answer to many of those questions are no, the value is going to drop dramatically, right? Now we come to the valuation itself. So valuation, there are typically three methods that are utilized. One is called the cost approach. So let's say you have a software that you're thinking of buying. Before you make you decide what you're going to pay, it's often useful to know how much it'll cost you to replicate that software. So that's the cost approach, right? What is the cost of replicating that asset? If it's lower than what the seller is trying to sell it to you for, you may be better off replicating it, right? But that doesn't mean you have the capability, but at least you have a sense of what that benchmark is. The second piece is market approach. This is like everybody understands, if certain assets sold for, if your neighbor's house sold for $1 million and it's 2,000 square feet, you can translate that into your house. That kind of a benchmarking of a market-based. The market provides you an input. You have to translate it because the asset that was sold in the market may not be exactly what you have, but you can do certain extrapolations to try and infer what the market might pay for your assets. And then finally, the income approach. Now, the power of the income approach is that you are forced to forecast the income you're going to generate from these assets, and it's visible to everybody what you have projected, and it allows people to challenge your assumptions. So even from a seller standpoint, it's often useful to see it because then you go into the discussion much more confidently because you have kicked the tires on the assumptions there. So the analogy, again, to use a real estate property is that what is the rental income I'm going to get? And it's based on the income piece. So that's the three components. And in doing so, we are, of course, looking at risk factors. So for instance, if one of your assets is being litigated by somebody who claims that you have infringed on their IP, right? That can impair the assets. What if you have a license to somebody else? That can impair the value of your IP, right? And then ultimately, if you buy those assets, you also want to know how that's going to integrate into your company. A classic problem we often see is that much of IP can be the form of trade secrets that reside in the heads of your best engineers. Acquisition happens, engineers walk out of the door. You think you bought something, you don't get anything at the end of the day. Right? Yeah. So these are some of the factors that we delve into deeply in valuation. So it's not an easy task, but something that needs to be done if you want to go into the negotiation well informed.
Yeah, I mean, we often think valuation as a one-time process, but definitely there are implications, as you have mentioned throughout the M&A transactions, that we definitely need to be careful of. So, John, what specific IP issues should be addressed during the due diligence phase?
Absolutely. During the DD phase, right, the issues really that require more attention really goes back to the legal aspects that Oommen just referenced, right? So a few things in particular. So first, from an ownership verification standpoint, right, just confirming that the selling company actually holds clear ownership of the IP, right, and checking if there's any outstanding claims to that same IP. Second, registration status, right? Just ensuring that all of the relevant IP is properly registered and maintained, including renewals and compliance with regulatory requirements. For patents, right, there's obviously registering in the US versus global, right? So just depending on which IP, there's different registration status to be on top of. There's also the scope of protection, right? So looking at really the breadth and the strength of the protections around the IP. So, for example, going back to patents, right? Are the patents written broadly enough to cover potential competitors' products and services? Fourth, we want to look at licensing agreements, right? So reviewing, are there any existing agreements to really understand how they may impact future revenue, right? And IP usage. And that honestly affects the valuation quite a bit, right? So how much flexibility they have to license out further and whatnot, what geographic limitations they may have, right? And then lastly, litigation history. So investigating any past and ongoing litigation related to the IP, right? As obviously there's a lot of legal challenges that could affect the value and the operations and potential business value.
Yeah, I mean, you definitely do not want to overlook these issues. I can see a potential, risk, and addressing these issues definitely help mitigate those risks and inform the valuation decisions. I want to move to the market conditions, Oommen. Like, we know the macro economy do play in some degree. How do market conditions impact IP valuation in an M&A?
A very important question, because and it's often helpful to think about, how IP creates value before you look at the impact of certain macro or microeconomic circumstances, right? So what do we use IP for? We use IP to help either expand your revenue that you could not have had but for the IP, or you look to improve your pricing, same product, same volume, but better pricing because you got a superior product, or it helps you avoid certain costs, right? You have a superior technology of manufacturing. It doesn't show up in the product, but allows you to produce the same product at a much lower price, increasing the margin. So if you keep that in mind and start thinking about the various factors that tend to impact asset values, think about economic assets, right? So in economic conditions, right? In a booming economy, now when you have great opportunity, the fact that you can sell more, you can capture greater market share, increase the price of your product, all of that creates value. And on the flip side, when the economic conditions are down, all those expectations about how much revenue you can generate, how much margins, gross margins you can generate, all of that is impacted. Now, if your IP is now on the side of helping with manufacturing, if improving your production cost, perhaps that can be helpful in a down economy, right? Everything else remaining the same, more efficiently you can produce, greater the value, right? So there are interplays, but generally speaking, the worse the state of the economy, lower the value of the IP. And it's as a broad rule, right?
Right.
Now, the thing about IP is that its value is also not just dependent on the economy. If somebody comes up with an alternate technology that can do what you do much more efficiently, all of a sudden your highly valuable IP that was highly valuable yesterday is no longer valuable today. Right? So you don't control any of the circumstances. Right? Somebody else does something, it can have an impact on value. Right? So the obsolescence of IP is an important factor. And similarly, as can be, if you have a competitor that comes into your space and hires away your best engineers, you have lost IP. And there's only so much you can do to protect, right? Competitive landscape. So let's say you have some battery technology. In some instances where a number of other battery technology companies come into your space, that's more competition. That means your market share is likely to be impacted. But on the other hand, if there's a lot of interest in the sector, like for instance, right, you look at AI companies now, everybody's value gets elevated because it's AI. Similarly, if you are in a certain space and that space is hot, yes, you may have greater competition, but your value may still go up, right? And then finally, regulations, as you all know, are never static. One day it looks a certain way, change of administration, it's funny that we're talking on election day. Tomorrow it might be a different set of policies, right? And that can impact, right? How difficult is it to get a patent, whether certain kinds of assets are patentable or not, all of those things impact value. And those are things to be very cognizant of as you think about M&A within IP-rich companies.
Yeah, I mean, buyers and sellers definitely have their own lenses, right? From their perspective. So setting up and framing these expectations on these market conditions at play that you've laid out, the economic, industry dynamics, competitive landscape, and regulatory helps us. I mean, as a business broker, it helps us to give them a different perspective and manage their expectations. So. And definitely strategies for both buyers and sellers. John, can you provide an example of how IP valuation influenced a real-world M&A deal?
Sure. Actually, I'm going to draw upon an example within the tech space, which is where Oommen and I at KPMG focused on. Obviously, we helped value a lot of different industries, but being in San Francisco, right, we had a lot of tech clients. With that said, right, if we look at the acquisition of a tech startup by a larger technology company, right, it could be publicly traded or just a larger a tech company. In this scenario, right, the startup might have developed a unique hardware solution, right, with a few patents. And in these scenarios, the acquisition price, honestly, a majority part of it is from the IP value, right? From the patents, valued, the different ways that Oommen mentioned, likely, income approach to get to that valuation. But hey, during due diligence, right, if the acquiring company's team identified that these patents have, a strong market potential and was crucial for future product development, that's why they want to buy it, right? Usually they would, like I said, use the income approach, right? And you're projecting future revenue streams from the hardware, which would impact the price, obviously.
Mm-hmm. Mm-hmm.
But during that valuation process, if they also discover potential litigation threats against the patents, this will lead to a much lower price, right? Considering the legal risks involved, they need to lower the projections of the revenue streams, right? So in this scenario, ultimately, the acquiring company will likely offer a lower purchase price, right? While balancing the potential rewards against the legal risks that they identify during DD.
Yeah, definitely, shape or impact the M&A negotiations, right? So, Oommen, what common pitfalls should companies avoid in IP valuation during M&A?
There are many.
Yeah, let's go through it. Yeah.
The first thing to think about is, like, let's say you were buying a factory with some machinery. You can walk into the factory, you can see the machinery, you can see how many they are, you can see in what condition they are, and so on. This is not something you can see in IP because these are not observable, tangible assets, right? So the fundamental question really often in these cases is that, are you getting what you think you're getting? Is how I frame that question, right? You think you're getting certain kinds of it, but are you really? So that's what is fundamental in an M&A decision, right? So the not doing the due diligence is often very, very costly. I think especially you can see this in during booms when there is a hot sector, everybody is buying it. They're all competing very heavily to buy. They don't do the due diligence, buy the assets only to find out, oh, shoot, this is not quite working out the way we thought, right? This is not just for IP, it's true for any M&A, right? If you don't do your due diligence, you're going to pay a price.
Yeah.
The second piece of it is that people, especially inventors, because they've invested their life's work into IP often, right? So they place a very high premium on the asset because that's how they view it, right? Now, again, remember what I noted earlier. The value of an IP asset on a standalone basis is very different than the value of the IP asset within the business. So until you can make the connection between the IP and its commercial value, one, conceptually, and then secondly, show that it is real. Right? How do you show that there is traction? How do you show that product market fit? Right? All of that means that it's very easy to sit at your desk and think that IP is, very important and hence highly valued. So overestimating IP value is typically a big trap that you can fall into for sellers, because that prevents them from realizing the value that is truly available in the market, because now you are limited by your ability to see beyond the number that you initially estimated. Right? The third piece would be, looking at it from the buyer's perspective. How do they view the asset? How many buyers exist? Because in the case of IP, it's not like there are 20 buyers who are interested in your IP. They're typically one or two. They're going to look at it from the perspective of, hey, how can I integrate this into my portfolio? If it's a technology that is, yes, I would love to have, but it's very hard to integrate because they use a different approach than what I'm using. The cost of integration can overwhelm the benefit of integration, right? So makes that difficult, right? Market changes. As I noted earlier too, market is very, very dynamic, especially in the technologies where the technology tends to have high value. The market also tends to be dynamic. So you have to understand the IP both for its own sake, but also in the context of the market within which. And when I say market, not just the business market, but the technology market, right? It operates. And then finally, an assessment of the IP can be costly. Let's say you're doing very deep tech and you need engineers who have lived and breathed that space to assess the IP for you. That's costly. So you might try to take shortcuts, and sometimes it works, but it often can come back to bite you very painfully. Right? And whether it is for IP analysis from a business side, technical side, you have to wait. I wouldn't say that for every analysis you have to spend $1 million before you can do anything. That's not the point. The point is certain kinds of IP where that's a high stakes issue, you want to invest in the upfront analysis to get the best expertise you can get so that you know what you're getting into. That's how I would characterize as some of the things to think about when you're getting into M&A, especially when IP is the primary driver of value.
Oh, yeah. No, I mean, avoiding these pitfalls definitely requires diligence and, to your point, expertise.
Yeah.
Avoiding this will ultimately leading to a much more successful M&A outcomes from both parties. But John, how can a business enhance their IP value before pursuing M&A?
Yeah. So, I mean, this is really our exit factor, exit consulting practice, right? Helping businesses enhance their value, get ready for an exit. So, a lot of times that playbook includes adding policies and scorecards, right, to make sure operations are running effectively. But focusing on IP value, right? A few steps that we would recommend businesses take is one, strengthen their IP portfolio, regularly review and update IP registrations, right? Ensuring that they are robust and up to date. Obviously, kind of the risks that we mentioned earlier are, some of the things you do, right, to improve the valuation. Second, conduct IP audits, right? Assess the IP assets to identify strengths, weaknesses, and opportunities for improvement. Third, invest in innovation, right? Being able to continuously innovate and develop new IP to bolster the portfolio. It not only enhances overall value, but also diversifies, right? So the more diverse the portfolio and robust it is, the higher the valuation. Educate stakeholders, right? So you're making sure that all of your team members, crucial team members, understand the importance of IP and the value it drives to the business. Lastly, establishing strong IP policies is key, right? Mm-hmm. Establishing clear policies for managing the IP, including confidentiality agreements, right? Employee training on IP protection to really set the stage for a clean exit.
Yeah, I mean, by taking these steps, I think that you mentioned, businesses can present a more attractive IP profile during M&A discussions and potentially increasing their valuation. I guess, all that we've discussed all sounds really, really interesting. Definitely help to give us a framework of how to think about IP. But before we let Oommen go, Oommen has been very helpful. I was very grateful to have you here. Any final thoughts for our listeners?
It's in some ways, and I'll recapture quickly what we discussed earlier. But I think one point I would like to add here is that often there's a perception that IP valuation involves putting a bunch of numbers into a formula, into an Excel spreadsheet, and whatever number comes out of it is the value, right? And that creates a perception that's more science than art, right? Actually, it is both, right? Because you have to convince somebody that the numbers that have gone into the analysis are reasonable, supportable, and believable numbers. And it is tied to a business model. There is a reason why this value is created, right? And so it seems like you can hand wave your way through many of these things. And it's also wrong to think of it just as somebody else sold it for $1 million, so mine is also worth $1 million, right? That kind of thinking also is flawed, right? So bringing them together is very important. And again, I'll just remind our viewers very quickly that, one, realize that the more you can show that your IP has commercial value, and the more evidence you can provide that your IP converts to a product, which then converts to revenue, the greater the believability factor, right? This is why I was pointing to earlier, if you take the IP outside of that business story, the value drops because now the buyer has to come up with a story. Right? when you bring out the story and it's almost like you're leading them down a path by showing them how exactly value is created. So that's kind of important to keep in mind. And the last comment I'd make is that unlike real estate or buildings or factory equipment, the nature of property rights associated with IP is a little more loosey-goosey, right? Because if you have a trade secret that allows you to make the best fried chicken in the country, and your employee walks out with that recipe, he doesn't do it exactly the same, but comes close. Now you have competition, right? So, and unless you have taken certain steps that are needed to protect it as a trade secret, that's gone. Once it's gone, it's gone, right? Even if you have to fight it, you now have to incur costs and it takes time. If you avoid, just have to remember that just because you got a patent or just because you have established a trade secret doesn't mean that it's all yours. You have to actively be engaged in protecting it and realizing value from it. So those are some of the things I would, say in closing. I think there's a lot here, and I think it's great that you're having this podcast to kind of highlight some of these issues.
Yeah. No. Thank you, Oommen and John, for these invaluable insights. A good understanding. We just scratched the surface. We kind of lay down a very high level understanding, definitely nuance and intricacies of intellectual property valuation in the context of what we do. Mergers and acquisition is essential for navigating this complex landscape. It's a science, it's an art, but again, these are just scratching the surface. But so if anyone needs help with specific IP valuation and financing needs, I know they can reach out to you directly, Oommen. What is the best way to contact you?
The easiest might be by email, which is O as in orange, Thomas, OTHOMAS, one word, at Venndigm, V as in Victor, E as in England, N as in Nancy, N as in Nancy, D as in dog, I as in India, G as in God, and M as in Mary. Venndigm. So O Thomas at Venndigm, and my mobile number, if you want to reach me on a call, it's 510-685-3375. 510-685-3375.
Thank you, Oommen. And if you're looking to buy or sell your company, you can reach out to John. John, what's the best way to contact you?
Sure. Feel free to call me directly at my cell, 626-864-3369. That's 626-864-3369. Or my email is jcheung@tworld.com. That's JCHEUNG, N as in Nancy, G as in good, at tworld.com. Thank you so much.
Thank you, John. And if any of you are looking to prepare your companies for an exit, please feel free to reach out to me at 909-561-6771. Again, 909-561-6771. And to our listeners, we hope this Q&A has, equipped you with knowledge to better assess and manage your IP assets. And good luck in your future M&A transactions. Thank you.
Thank you.
Bye.
Hey, Jessica, you know what time it is?
Money time?
Almost. It's time for Listing of the Week.
Hey, welcome back, everybody. It's Listing of the Week, and I have Eli Tatem from Transworld Business Advisors of everywhere in South Carolina, basically. So, Eli, you have a nice deal you're marketing right now. Tell us about it.
I do. It's actually a trucking company in Spartanburg, South Carolina, and listed right now for $11 million.
Wow.
It's a pretty big deal. The sellers have been in the industry for quite some time, and they run into some health issues. So, husband and wife team. It's EBITDA right now is right around 1.5 million, tracking to be about 2 million this year.
Wow.
So
sounds like a really healthy company.
Yeah. They got about 40 trucks that they own, 18-wheelers.
Right.
So it's pretty strong.
All right. And they want to retire, obviously, for health reasons.
Sure.
So that's always a good reason to buy business. Did they have a price, or you're just putting it out there to see what their bids will be?
Yeah. So we got a valuation actually done on it for about $9 million based on a $12 million revenue.
Right.
They're tracking to be about 13.5 to 14 this year.
Great.
So they're going higher than that. And some of the hurdles we got to get over. The location, as far as being a part of the company, they're wanting to do kind of a stock sale with it, but they don't really want to sell that, so we got to figure out that piece.
All right.
And then they did have some reputation stuff they got to work on because they had a bad experience with one of their drivers.
Oh, okay.
Interestingly enough, we got the net reputation guys across the way.
All right.
Here.
Well, that happens, and we get best way to fully disclose it, and the buyers understand, and we could get through those kind of things. Say, listen, a business that's making $1.5 million to $2 million, it's a pretty good business. Sure. What are some of the ways you get yourself motivated? How do you get out there every day to do what we do?
Sure. That's a great question. I mean, one of the things we do is we go back and we look at how we got deals done in the past, some of the hurdles we've overcome. We like to dissect every deal we do. What went well, what didn't go well, how do we learn from it? And that's been really helpful because you go do the deal you're in now or whatever it is, and you can say, okay, I know how to attack that.
Right. So you don't get down by obstacles anymore because you've been there. You've done that.
Yep.
That's the great thing about Transworld doing thousands of deals a year.
Yep.
We've basically seen it all. And, as you said, you just go to some of the other people around Transworld and gather that information.
Yep.
So
we like to say sometimes you win, sometimes you learn. That's the way you do it. So.
That's a great thing. Eli, what's the best way to get in touch with you?
Yeah, again, my phone number, 864-527-5995. My email, etatem@tworld.com.
Sometimes you win, sometimes you learn. Perfect. Thanks, man.
Thanks.
Hey, Andy, do you know what time it is? It's time for our deal of the week.
Deal of the week.
Sold.
I am Jennifer Fox, president of Transworld Business Advisors of Boston, and I am here with business broker Brook Hartnett in the Boston office. And we are here to celebrate his recent closing of a storage container leasing business in Massachusetts. Brook, can you tell us a little bit about this business?
Yeah, so this is a really great business. It was a 50-year-old container leasing business that serviced and had customers in most of Massachusetts, a little bit of Rhode Island and New Hampshire. So these sellers had the business for a couple of years. So they bought it from the founder. So these sellers we know were very busy. They had a number of other business opportunities that they were focusing on. So they really thought it was time to find another great fit for it to continue on the company's legacy.
And why was the seller selling?
Yeah, I mean, they just had, a number of other business opportunities that they were looking at, and, they thought it was, a great time to, find another fit.
And what about the buyer? Why don't you tell us a little bit about the process about how you found this buyer?
Yeah, so this buyer came to us, having a experience in corporate and a lot of management experience and a lot of success in what he did, and he thought it was time to go the entrepreneur route and own his first business. So this one was really a perfect fit for him because it allowed him to keep his corporate day job and really start to build his portfolio of businesses on the side with an opportunity that didn't require him to work 40 hours a week.
Yeah, it did sound like it was a really good fit for him. And he also went through the SBA process, which is a small business administration loan, which is really great for a lot of first-time buyers. So tell us a little bit about managing that process.
Yeah, so because this was his first business purchase, he didn't have the network of contacts on the attorney side and the lender side. So we were really able to facilitate and connect him with a couple we picked a great local transaction attorney and introduce him to a couple lenders who we know who do a great job. So he found a really great fit with a lender who was able to work with him throughout the process and, make sure that, it was a good fit for him. With this business, there was a huge amount of customers. They had like 400 containers, a lot of customers, 300 customers or so. So there was, a lot that went into this one. So really what we, did throughout the process to make it easier for both the seller and the buyer was, again, make sure everything was organized for everybody and everything was available and facilitating communication between, two very busy buyer and sellers with, two other things, a couple of things they were doing.
Yeah, exactly. The buyer was working a full-time job. The seller had other businesses. So at times communication could be challenging, and you did a great job facilitating that and getting it across the finish line. So great job on that, Brook. If someone wanted to reach out to you about selling their business, how would they do so?
Yeah, absolutely. So the best way to contact me, call, text, or email. My phone number is 631-965-90730. And my email is dhartnett, HARTNETT @tworld.com.
Awesome. And congrats again. Another good deal for good people.
Thanks for tuning into the show today. If you like the podcast, share it with your friends on social media. And don't forget to subscribe and leave us a review on your favorite podcasting app. If you have questions, would like to appear, or have suggestions for topics for the show, get in contact with us through our website, thedealboardpodcast.com.